Hey traders, checking in on the stock market today. We have retail euphoria out there with names like GME, BB, AMC. We'll call those our Reddit stocks because Reddit is definitely a source of these pumps that are leading to short squeezes, and we are watching how it had impact on the broader market as a whole. Let's check it out.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So we see on SPY's candle today, we have a long lower wick bouncing off EMA's support. Our last dip was down to 373.70. We'll call anything above that level a higher low. So what took place? SPY, out of nowhere today, just dumped. Big dump, big bear volume, almost a 2% drop in 30 to 60 minutes. 1.6, less than 2%. That's notable. This is one of those examples where I've talked about it before, where I compare it to the bears sucker punching the bulls in the face, catching them off guard, but we didn't even confirm a 5-minute downtrend. We went from high of the day to low of the day, and then after the bulls got their wits about them after getting sucker punched in the face, they took control for the rest of the day and closed near the high of the day. So complete recovery, lack of bear follow through, but a very notable drop. And if you look at GME, which has been getting all the attention with the headlines and Reddit and Citron and all that, we topped out with a massive move up to 159, and then we dumped down and saw pretty much a 45% drop at that same point in time. It's not a coincidence that this name that's been getting so much attention topped out at the same time that the S&P 500 did and then dropped very hard for a half an hour. So it's important to be keeping an eye on the broader market, or I should say the market environment and what's going on. I am seeing more retail FOMO than I've ever seen in my life on a personal basis with friends. And at the end of this video, I'm going to attach the morning clip from the live stream this morning where I was talking about how this euphoria ends. And it was just nice timing with it happening, 45 minutes after I said that. But what this did for me was, I love playing oversold bounces. As soon as I saw that it was a retail short squeeze name causing a market top, in my opinion, a temporary top. As soon as I saw that, I said, I don't want anything to do with this bounce attempt because this is an unusual market environment. This is not your standard drop and oversold bounce play. I am going to be in protective mode. And what I did is I sold off a lot of my long positions, most notably in the MJ sector. We'll get to that in just a bit when we look at MSOS. But I sold off, and rather than play bounces, I just went into turtle mode, which is what I did during COVID, and just put my arms and legs in my shell and just went back to cash and preserved my account level where it was at, and then just patiently waited for the dust to settle. So I left money on the table where I could have, played the bounce, but I did not give back money, which is priority number one for me personally. So with this SPY move, we bounced, we set an hourly lower high, we've set a higher low right into the end of the day, and then that bull move. So a big shakeup took place today. We now have Apple, Facebook, and Tesla earnings on Wednesday. We've got the Fed, the FOMC on Wednesday. There's a lot happening on Wednesday. And knowing that after today and how we started this week, I'm going to patiently wait for the dust to settle after Wednesday. And if I don't make $1 over the next 2 days, that's perfectly fine. I'm going to be very cautious, very protective. I am in wait and see mode until we get over that little hump of those big earnings and the FOMC. And if the bears are going to prove anything to us, we have to at least confirm a 5-minute downtrend. But 378.46 is now a short-term support level for us to be watching. IWM, new all-time high today. No red flags whatsoever here. Our daily high or low is 209.55, and the bulls are keeping their complete control on this uptrend. QQQ, big dip, but bulls bought that dip significantly. Again, a bit of a V-shaped bounce. And if we open higher tomorrow, I'll be watching for a bearish entry off the high of the day. If we open lower, we're going to be watching for a play off of support. It all depends on what the overnight session does, but we have a massive range on the daily candle today, and I'll be watching, depending on where we open, for the potential of an inside bar tomorrow. And if we see inside bars, that means we have levels to play off of at the extremes of the range on the day today. XLF has been weak, and it's trying to see a bounce get started here. Hourly has to change the trend. This move came straight off the low. Wherever we top out, we have to hold 29.74, change the hourly trend, then we zoom out and scout a daily lower high on any bounce. And again, I keep saying it, but when the tech sector finally tops out temporarily and sees daily consolidation, broader market bulls want to see XLF start to bounce for that inverse rotation relationship to be continuing. Healthcare, still extremely strong, pretty much sideways the last 4 days, but we're right there at all-time highs, and the bears certainly aren't proving anything to us. Biotech sector, new all-time highs, very strong close and bounce. New daily higher low, line in the sand is 148.81 support, and we're looking up towards 160 psychological resistance as the bulls maintain their strength in the biotech sector. Semiconductors, daily EMA 12 support test, still in an uptrend. Bulls need to change the hourly trend back in their favor. And once they do, we'll be looking for a daily higher low to be set. TAN, the solar sector, 123.66 resistance broke. Not a bunch of follow through though because of that broader market weakness. We sold off here and we didn't see much bounce. Every sector that I just looked at saw a solid hourly bounce today, not TAN. So if we get any green tomorrow morning, we are just scouting an hourly lower high compared to 125.98. MSOS, still sideways, but I exited my positions at 45.94. Again, it was just instantly noticing red flags. I shorted SPY as a hedge right when we saw weakness. And again, you'll see that I was prepared for it just by my commentary that I'm going to stick at the end of this video during the live stream, but just was prepared to just act. And that's what I love about being a smaller retail trader. If I'm trading with $100 million, I can't just act like that. But I was able to just liquidate in minutes flat. And I love that agility to be able to move my capital to different sectors, whether I'm going to crypto or trading stocks, and most notably entering and exiting positions on very short notice. So I have no urgency to I am going to re-enter these positions, but it's looking like weekly consolidation may get started here. And knowing that I exited at 45.94, which is 1.5–2% lower than where we closed, I'm just patiently waiting for this sideways range to short it out, to sort itself out a bit. And if we break 44.40, I know to remain a bit more patient as we will then watch for weekly consolidation from there. The VIX, big spike up, big upper wick. Again, no follow through whatsoever. That is the theme of this market for the last 8 months. Bears get 1 day. They didn't even get a day today. They got 45 minutes. And then the bulls just buy the dip. And one time that will not be the case, but it's not this time. Big upper wick, hourly, trying to find a higher low. And then we'll just look for a lower high. We'll be watching for a potential equilibrium setup. Bulls want to hold 22.60 to try and set a higher low compared to that level and see this range tighten up. Lack of follow through in upper wicks constantly occurring over the last 6 weeks. The dollar trying to set a daily higher low. Anything under 90.95 would just be a daily lower high. And if you are an asset bull, whether it's crypto, metals, stocks, you want to see an inability to break 90.95 and then a bear break of 90.05 to confirm a daily downtrend and increase the odds that this is a weekly bear flag. That's what we're going to be watching for the rest of this week. A break of 90.95 would be bullish, and a lower high and lower low would be bearish. And if you hold assets, you want the bears to win on the dollar. Inside bar on the metals, if the inside bar breaks bullish, our daily higher low is set, and we then need to break the high of the bounce for a confirmed daily trend change back to the bulls. Same thing for silver, closed a little bit weaker, but it's the same setup. Inside bar has to break bullish for the daily higher low to be set, and then bulls need to break the recent high to confirm the daily trend change. Miners, So miners, the range is a double bottom on the daily time frame at 34.47, and the most important resistance is 36.32. As long as we are within those levels, we are range bound, and we have been within those levels for 10 days now. So patiently waiting for a break of this range. When we get close to resistance, bears are going to be watching for a top fish. We have a double top and a double bottom, and we're a little bit closer to support than we are to resistance, though not by a significant amount. Oil. So oil confirmed a daily downtrend here on the March futures with zero follow through at the moment, which means zoom out for the potential of a bull flag. This is a potential weekly bull flag at this point. We would have to see bears break 51.44 support and see follow through to negate the possible weekly bull flag. We would still be watching for a weekly higher low to form, but the odds of it being a weekly bull flag would then drop. Natural gas, 4-hour falling wedge from oversold conditions, grinding oversold conditions, that marked our temporary bottom. So falling wedge shows us when bears are becoming exhausted. We broke bullish first thing Sunday night, and that started the daily bounce with follow through. Now we're watching for a daily lower high compared to 280, but the bounce is beginning to become significant enough that the bulls are watching for a daily trend change back in their favor to shape up as we look for a weekly higher low to try and be set compared to 226. So solid bounce for the bulls, need to set up the daily trend change. So I'm going to remain cautious. Again, bulls bought the dip. So it's easy to say that bulls are back in complete control, absolutely. But I really like how January has gone in both trading crypto and stocks. I'm not giving any of that money back, and I'm going to wait it out and just be patient for a couple days. That is my game plan. Other than that, today, didn't do a whole bunch of trading. Still interested in ZM. Swing trade, attempted to re-enter a full position, stopped out on the market weakness. Still have a half position from the low 370s. Bulls need a 404 bull break to confirm the daily trend change, and I am still holding a half position for that. So essentially, I'm just in a short position to hedge my SPY long-term no touch, a ZM swing, GLD, and SLV. I've got swings there based on monthly support, and that's pretty much where I stand right now. So we'll end it here with the little live stream commentary from this morning, just in relation to GME and the insane euphoria that the retail traders are all feeling as it shoots up. And I'll see you all tomorrow. Have a good rest of your day and do good things.